Hey everybody, we should be live right now, and I'm just going to be testing out the microphone right now, so just let me know if you guys can hear me okay. And once we get the sound check okay, I'll get started with the webinar. Everybody hear me? All right, great. All right, so welcome to this webinar, and I'm going to be talking today about the dollar and how it impacts the markets, equity markets, and also other assets. So I had some requests to go over some of the information that I did in Larry's show the other day too, because I kind of zoomed through the Corona and the Fed juice. So I'm going to go through that very quickly in the beginning, and then we'll get to the concept of the dollar and its impact on different asset classes and the importance of the dollar juice, which is a new indicator which I'm working on creating on multiple time frames to track the S&P 500. So before we get started, I just want to read to you a disclaimer. I read this at the beginning of every webinar. Trading commodity futures involves substantial risk of loss. Past performances are not necessarily indicative of future results. Services include products that are traded on margin and carry a risk of losses. The products may not be suitable for all investors. Please ensure that you fully understand the risks involved. Wolftrader Futures is an educational service that is designed to be a supplement to the book A Trader's Guide to Financial Astrology by Larry Pesavento and Shane Smoleny. Wolftrader Futures is separate from Mr. Smolen's trading firm Trading Ridge Analytics, LLC. The information and strategies presented in Wolftrader Futures are completely independent of any strategies or operations employed by Trading Ridge Analytics. The data in the creation of astrological planetary data charts and cycles is public information that is already reflected in the underlying prices. Okay, so for those of you who are new, first of all, I would ask that you go ahead and if you like the video and you like what you're seeing, go ahead and hit the like button and also subscribe to the channel below so we can continue to get build up in the algorithm here on YouTube, and that will definitely help us here. So for those of you who don't know what Wolftrader is, this is we're a service. I'm Shane Smoleny, and I am the founder of Wolftrader Futures. And the whole goal of what we're trying to do is to make sense of financial markets for you so you understand what's going on from everything from the Federal Reserve to long-term cycles to the dollar. We educate you on these cycles and influences of the markets. We educate you on the impact of the Federal Reserve. And then we also give you the highest probability of alignments for investors. So we provided what I call advantages in the markets when we've lined up all of these factors in your favor, and there should be an ease of movement in the markets. We strive to provide an excellent customer service and answer questions fast. So that's the goal here. I just got a question. Can we talk about silver today? I don't have silver prepared, but I do have gold, and I will talk to you about gold. I can do another presentation on gold and silver next week if you like. But I'm just gonna talk about the general concept here of the dollar. For those of you who are new, again, you can reach us in multiple places. You can reach us on Facebook. We have a Wolftrader Futures Facebook page, Instagram. We have 2 Twitter followings. One of them is at Wolftrader FUTU1, which is this one here, and then this is the second one, which is for the gold members. Then we also, this is our homepage, wolftraderfutures.com, and we're also on StockTwits now too. So I took that as a suggestion of someone in the chat on TFNN. So I'm trying to expand. It's a slow process, but one day at a time, one customer at a time. So we are just in that process of growing here. And so if you want to get some information, you can head on over to the website. There's a free email list sign up where you can get on this list and you'll get email updates from the site and the services that we have. Okay, so I'm going to talk about the coronavirus. So coronavirus is important, and I kind of glanced through this very quickly on Larry Pesavento's show. So I'm going to go a little bit more in detail now because it's on everybody's mind and it does affect the markets. So the United States on July, this was on the 14th, we're at 61,000. I know that graph was a little bit older, but this is the actual testing per thousand of people. So the United States is now clearly the most tests the most people per 1,000 people. So that's, that's adjusted for population. So we definitely have the most tests going on in financial markets. Sorry, in all the market. We have the most tests going on of any country in the world. And what that does is that creates more positive test results, which I'll talk about coming up. And so what I'm trying to do is to give you guys a very objective analysis of what's going on with COVID. But that's the first graphic I wanted to show, that we are the largest, we do the most tests in the world. Okay, and that's adjusted for population. And we started out behind, definitely. We started out South Korea. South Korea started out very, very fast, but we just overtook everybody. So we're testing the most, so we're going to have the most positives. And I'm going to try to put this in perspective for you. So I'm telling you that the numbers that you see are inflated because we're doing more tests. Now, this is the perspective of the U.S. excess of deaths. So this is a 5-year average. So it's kind of like on a stock, you would see a moving average. That's what this is. This is a moving average of the excess of deaths. So when you have a pandemic or you have a flu, you would expect the number of deaths to surge up over this level. So this was the 2018 flu, just to give you a perspective. So we have surged above this line before without COVID. And then this was what we saw during the outbreak. The peak was in April into here. And then we pulled back and we're basically almost to that line. So I just want to put that in perspective. Like, we're not really that far above where we should be in terms of excessive deaths in the country. So, I mean, I think that should be really a baseline that we look at when we're trying to analyze what is really going on with COVID, because we see all these graphs, we see the number of cases, and it's just skyrocketing, and it makes it sound like it's like the end of the world. But in reality, we're really not that far above the expected excess of death line. But this is not to be taken lightly, because we're in the summer, and of course these viruses tend to do much better in the cold weather. I have a question here. I remember you spoke about that special conjunction astrology in March, and is back again in July, I guess. So okay, so he's talking about, Atul is talking about this COVID transit here, and I will speak about that. There's a shutdown transit coming in early August, and I talk about that in the newsletter. And that energy relates to shutdowns, and obviously we've seen the call for shutdowns around the globe, and that's coming up. I don't believe the positive numbers. I've been reading a lot how the labs are inflating the numbers. Yeah. So I think these numbers here are pretty hard to fake when you get the excessive deaths, because you're looking at an aggregate. So I trust these numbers. These are from the CDC. Everything that I get is from the CDC or the European CDC. So I'm not just picking random numbers out here. This is published data. This is not some random study that that somebody just decided to inflate or deflate. Now, there are some states that are definitely running high right now. One of them is Arizona. Arizona is running really hot right now. You can see the flu was back here in 2018, and they're spiking right now pretty good because of the COVID. So that's not good. And so, Arizona is one of these states where the spikes are high. So what you see also here is you see states that have hot spots, and then you see on a national level what's going on. So we gotta be very specific with what we're saying, because there are some states, specifically like where I live in Florida, it's very high. But we're probably just getting back to where we were in April, in Florida even. New York, you can see here, this was the flu in 2018. This was the excessive death line here. Of course, New York was the epicenter here. But notice it's starting to climb again. So I think any of these places that are highly congested, you're going to see increases in COVID. And again, this is not good, because this is the summer, guys. So this is an enveloped virus. We know a lot about these types of viruses already. Okay, coronavirus is not this specific strain is new, but we know coronaviruses don't like humidity. It doesn't like heat. So this isn't good. I mean, even if it's not near the levels that it was, you definitely don't want to see it going up. And so, yeah, so I just wanted to show you that. This is Texas. Notice Texas isn't even really that much higher than the flu in 2018. You see this right here? I mean, if you watch the news, you would think that the end of the world is coming. But really, I mean, it's high. It's definitely higher than it was in April. But again, the flu in 2018 was about the same in terms of Texas. So just to put that in perspective of what's going on. This is Florida. So Florida is experiencing a spike right now, and I think that's definitely not good. But again, here's the expected line, here's the excessive line. So it's still above it. It's not good. And notice that the line is falling because we're in the summer months. So in the summer, you would expect this line to be falling. So that's not good because it's rising. But again, if you watch the news, you would think that it would look like this, right? You would think that we would be seeing something crazy spiking up, but really, it's not really that high. I'm not downplaying the virus. I mean, I fully believe, I believe there should be a national mandate for masks. I mean, me personally, I mean, if that was me, I would have put that a mandate like immediately. And I said this from the beginning, like I said this from day one, because I researched these types of viruses, like period, you have to wear a mask. Like I said that and it went back and forth and back and forth, but I even put that in the newsletter when it first came out way back in February, March. I was telling everybody, look, you got to wear masks. And there's studies that say that masks don't work because people don't wash them. Well, duh. I mean, you can't wear dirty masks. You can't walk around. It's like you're washing your clothes. It's the same thing. So anyway, so this is the COVID deaths per million, just to give you an example. So the U.S. is right around 400, somewhere in there, and Belgium is 800. Spain is higher. The UK got clobbered. I don't know if you guys know that, but Britain was one of the worst hit. They had like a 14% death rate. I don't know if you guys know that. And I'm not trying to go off tangent here, but man, I mean, I find this stuff fascinating when you study all the different countries around the world. And this is this is a relatively educated country, but the people were just ignoring the virus. They were piling on the tube and jumping in the train. And, why is it that they had a 14% death rate? So, I mean, Italy, we knew about, France, but, we're still nowhere near what these countries were with our rises here. But, I mean, any increases are not good. Now, I want to show you a graph here that shows this is the number of cases when you factor in the number of tests. Okay, so you actually take the number of tests and you divide it. You divide the cases by the number of tests. So as you do more tests, you're going to get more cases. So when you divide it out, we actually had a peak on April the 11th. The low was on June the 16th. And yes, there is a rise here, guys, and it's definitely rising. But if you watch the news, you would think that we're like up here or something, like through the roof, right? Um, that's not what's going on. We're nowhere near that. I'm going to move this over a little bit so you guys can see. Let's see if I can move this. If you watch the news, you would think that, like I said, we're through the roof, but really we're not. We're right around where we were in mid-May. Okay, are we rising? Yes. Are we past where we were in April? No. Okay, I mean, I'm not doing anything that crazy. This is just dividing the number of cases by the number of tests. This is pretty basic stuff. I mean, I'm not trying to manipulate data or anything here. This is just what it is. I mean, this is just the data. This is all from the CDC. Notice that these are the number of deaths. So it's pretty similar to that graph. If you go back, you see takes us back into like May, June, somewhere into here. The number of deaths is nowhere near where it was in April. Now, there's a lot of reasons for this. I mean, certain states are taking up the majority of deaths. Obviously, if you live in Florida, Arizona, California, Texas, you're at higher risk. But again, this is just to put it in perspective for you, okay? But definitely not good because we're in the worst. We're in the months that it's not supposed to be strong. It's not supposed to be strong right now, guys. So we need to. I think there's still time for the fall, but we really need to get our act together in terms of wearing masks and following procedures. So let me read. I'm just going to read some comments here. There were no flu deaths this year. Most of the 30,000 a year. People who have the infection keep getting tested to see if it's gone. Same person, multiple tests, make inflated numbers. Yeah, it's very possible. And then the other thing too, and I'm going to get off Corona here because I know you guys came to talk about the dollar, but one of the things that I read all these different articles because I find it's interesting. I like to read up what's going on in Iran and Italy. Iran got clobbered. I mean, Iran and Britain just got absolutely clobbered. But one of the things that doctors were saying was that they had 20 patients in one test, and at 20 patients, they knew they were positive, okay? But they were running the test. This was back in like in this area into here, okay? They were running the test, and 19 of them came up negative. So they were false negatives, type 2 error in statistics, right? So they knew that they had COVID, but 19 came up negative. So the testing has gotten much better now, too. So you combine better tests with more tests, and you're going to get skyrocketing numbers. So again, I'm just dividing the number of cases by the number of tests. It's very basic density function. I mean, this is very basic. If you talk to a statistician or anything, this is like as basic as it gets. I'm not trying to create, I'm just trying to give you the proper perspective, the balanced perspective here. So that's it. So anyway, let's talk about the market. So real quick here, I'm going to talk about the fear and greed index. And that fear and greed index, now this is the one that I cover on CNN, and this actually got up to 68. I was very happy to see that because I felt like we were reaching a top. I had been talking about that, and I'm going to explain to you what happened on that top because I did issue that downside a few days early, and the market did float around for a while, but finally it dropped. Um, Germany completely dealt with COVID. Unlike us, they have competent leadership. Yeah, I mean, different countries dealt with it in different ways. Sweden did, I think it's interesting. Sweden didn't do anything, and the older population got clobbered because they just basically sent them home to die. They didn't, so. But yeah, different countries had different responses, so it's interesting for sure. But we definitely need to get our act together and get more organized for sure. And people need to follow through. I mean, you can have shutdowns all you want, okay? And I was talking to somebody about this the other day. But if people aren't going to follow directions, it doesn't matter. You're just killing the industry for nothing. So you can shut down the companies and all you want, but people still going to go out and have parties and get together and not wear masks. The shutdown is not going to do anything. So the first thing you need to do is to get people on board with wearing a mask, following procedures, and you can function as a society if you do this. It's just we're just disorganized right now. So I think we have time to get it together though. But anyway, getting back to this. So fear and greed, peak 68%. I was happy to see that, because I think there's a lot of factors here that are showing us at some type of a very important top in the S&P. This peak here in the fear and greed index, this was on July the 23rd, and you can see that you had a peak here in January, a bottom here in March, and then there was this peak on 723 here. So I feel pretty good about that. I mean, it's not up to like 100, but look, that's definitely a sentiment factor that points to a top. Why don't we look at the number of hospitalized? Yeah, I do look at the number of hospitalized. I didn't have it on this graph, but you do need to look at the ICU rates. The problem with the ICU is that there might be one or two cities that are at capacity, and then they say ICU's at capacity for the state. Well, that's not for the state. It's just for one or two hospitals. And so the problem is that the media is very sensationalized, and they have to talk about drama to get viewership. So, I can talk about the hospitalizations and the ICU rates. The number of intubations is way down though. So people are not on ventilators as much. So, and younger people are getting it. So that might be why Florida is not as high on the deaths, because a lot of young people are out getting it. Okay, so greed reminds me of the dot-com boom. Lots of FOMO driving this market. Yeah, definitely. There's a lot of new traders in this market. Robinhood and all those platforms, and people doing the typical support and resistance lines and buying here. It's just very basic stuff, but because it's always going up, um, yeah, they could get clobbered here if the market does take a turn. So finally, it got to this peak, and anyway, so these are some of the forecasting tools that we use. We use the Fed juice. I also have the dollar juice now, the cat master signal, which is astrological based, the single transit clusters, and the daily percent statistics. So for those of you who are around with the newsletter, you know what this is. And I'm not going to go into all of these today, but that's just to kind of give you a summary. Johan, how's it going, Johan? When enough people get sick and hits home, then you will see a massive self-imposed quarantine regardless of the guys. Yeah, I think so. Let's talk about the current trend of the dollar up and down. Reminds me of 2000. Okay, yeah. we'll get to that. Let's just do a brief summary here. S&P. I just want to tell you where we are with the S&P. So S&P. This is my combined chart. The other day there was a Target sale guy, was a young kid, was on Robinhood and said him and his friends are trading on Robinhood. Yeah, everybody's trading on Robinhood, Johan. It's a little scary. Um, and when the market's going up, man, anything that you buy, it's gonna just keep going up. So anyway, these are the relative highs. I talked about this on Larry's show. So this was the RSI values of the market. Okay, so I put them in peak. These were the tops here. Every time it topped, I just like to write down what is turning the market at different points, just to give us a relative perspective, because each uptrend is different and each commodity is different. So we hit 78% here, and that's the second highest reading of any peak in this rally. The peak was 93% in that June. That was right before the eclipse. And so that was one of the things I looked at. And then we also had the cat master signal was in a sell. The Fed just went into a sell on the 15th. Now the market did go up for a couple of days, but I was watching this very, very closely every day, very closely. And it's kind of like a pilot. If you look at the dashboard of a pilot, it's got all those instruments. I'm looking at all of these readings every day, and everything was staying in a sell. It was telling me that this thing is not, there's nothing here that's telling me that this should go higher, at least on the short term. So every day I check this out, and the planetary speed index, we were going against that, by the way. It finally went into a sell on Friday. So now we've got the planetary speed index going down, and we've got a relatively negative period coming up. And I give the specific dates of all that stuff in the newsletter and the service. And this is the solar cycle here. So I'm just giving you a snapshot here. This is an annual cycle. This is one of the cycles that we look at. It hits a peak on 723, so that's right in there with the high in the market. Now, this is not the only thing to look at, but look, it pretty much ran its course. It went up during most of July and started falling now, and it falls for a good portion of August. August is essentially a very negative month, and this Fed juice that I track has been declining. It has been falling, and I think the market's going to catch up with it. And there's a lot of reasons for that. And the dollar is a big reason, which I'll get to in a few minutes. But right here, this was QE. And by the way, the Fed juice and the dollar juice are two different things. Just so you know, the Fed juice is what the Fed is doing, with all of their operations. And the Fed juice was rising the whole time during that decline in March. And eventually the market did turn, it did start to go up, but they started to pull back on that balance sheet in mid-May. And so the market kept going up during that time. So what does that mean? Well, what that means is that I priced the S&P not in terms of dollars, but in terms of the Fed dollars. So you can see here that it actually got up to an oversold position. We hadn't seen that. That's something new. Overbought right here. We had been in this oversold position down here. So by this metric too, the market is expensive. Okay, so that was another clue that I was looking at. And then on the weekly time frame, this is the first time that we're actually starting to see the longer term Fed you start to have a pullback here, and pretty significant. It's actually flattening out. Now it's not declining, but it's flattening out. So what this means is there could be an opportunity now for the market to start to have some selling. Because the longer term Fed juice is starting to pull back. So I just wanted to give you that backdrop of that picture of what's going on here with the market. So now we're going to start moving into the dollar and how I got into this concept of this. So first of all, the concept of a relative comparison. A relative comparison compares two things. So I'll compare like the S&P 500 to Apple, okay, or the S&P 500 to Google. And so in a relative comparison, I want to know how is Apple doing compared to the S&P, okay, or something like that. And so what this graph does is it's telling me right here that Apple started getting weak relative to the S&P. And so this graph down here tells me, if this is like a pairs trade, it's telling me which one to buy and which one to sell. And the same thing with Google. Google has been getting weaker than the S&P. And why do we care about this? Well, tech tends to lead on the way up and it tends to lead on the way down. So I always look at the relative comparison of this. So can you explain the S&P price and Fed dollars? Yeah, let me go back to that real quick. So S&P price in terms of Fed dollars. So very quickly, what this means is that the S&P here is priced in terms of dollars. Okay. So obviously it's 32.17. So down here, what I do is I take this S&P and I price it in terms of this Fed juice. And I believe that's what the real value is of the S&P. And so when the S&P rises, when the Fed juice is falling, that relative price of the S&P starts to rise. And when we get up to these high levels, it gets to these overbought levels. So that's the essential idea of it. And again, it's getting into the same concept of the relative comparison. I'm comparing the S&P to the Fed juice to get a valuation of it. So it got expensive. Anyway, so we're back to Apple and Google here. And all right, so this is the banks. So this is another one that I look at. How are the banks doing relative to the S&P? Well, obviously the banks have been very weak. Okay, you can see down here, this is JP Morgan. I do like JP Morgan, by the way, as a bank. I think it's a very strong bank. But relative to the S&P, you can see the S&P has been going up, and this has been very struggling just to go at least sideways here. So this is just an idea here. So this is another example of a relative comparison, a relative strength. So relative strength there. Okay, so let's talk about asset price relative to the strength of the dollar. What does that mean? Well, I'm going to start to evaluate how an asset looks in relation to the dollar. Okay, so let's just give a perspective here. This is going to be the US dollar here of like a big term perspective. This is one of the charts that I put in the currency newsletter just to show you, because you see a lot of people talking about the collapse of the dollars, the end of the dollar. I mean, I saw so many of these videos this week. So if you watch those videos, you would think the dollar is like all the way down, in the toilet, down the tank down here. Well, the dollar is not really that far down. The dollar is just crossing this 200 to 500 moving average. It has been falling a lot since March, since the market started its rally. But keep in mind that on the big picture, okay, on the big picture, that we still have a rising 200-day moving average, even though it's flattening out, and a rising 500-day moving average. So on the big picture, the dollar is still relatively strong. Now that could get weak. It could continue to fall and fall and fall. Okay. But, let's put this in perspective. I mean, we're still in a rising market in terms of the 200 and 500 moving average. So I just wanted to talk about that. Here's a question. Do you think the Fed is less now as the Fed has pumped enough for markets to function properly once the S&P? Yeah, I think the Fed is definitely pulling back. They're saving their ammunition, and if it falls, they'll probably pick up the activity again. There's no doubt about that. But I think what we're seeing now is a unique window because the dollar could counteract anything that the Fed does. If the dollar starts to turn around and rally here, then the equity markets could really start to fall. So if you start to see the dollar hook up, it's going to create a lot of headwinds. Even if the Fed comes in, it's going to create a lot of issues for the S&P. So I just wanted to talk about that. Okay, so let's talk about here. So assets in the US dollar. So I've got a couple slides here. I just want to lay some groundwork here. So assets that are priced in a currency are vulnerable to fluctuations in the currency. Okay, this is true for any currency. So the dollar has an inverse relationship to asset classes priced in terms of dollars. So there's a built-in negative correlation. Okay, so a falling dollar creates upward pressure on assets priced in dollars, and a rising dollar creates downward pressure. So I want to use that term pressure more than correlation because it's already got it's got an inherent negative correlation built in, but the pressure concept is going to help us understand. The pressure does not guarantee an inverse movement, especially on the short term, but most of the time it is inverse. Asset prices can move with the dollar. So just because the dollar is going down doesn't mean it has to go up, but just means that it's putting pressure on the security to go up. When asset prices move with the dollar, that means that the asset is getting very strong. Okay, and we'll talk about that in a few graphs. So again, down here, correlation is not the best term because it does not address the underlying strength. There's already a negative correlation implied always. Anything implied in dollars is going to have a negative correlation. Okay. All right, so we're going to get to a chart now, which is going to talk about gold versus the dollar. So I think this chart really drives it home. This is the chart here that is, I think it really summarizes this gold rally here, okay? So what you see here is this is a very similar concept to the relative strength charts I just showed, but this is gold versus the dollar, okay? So this is the crisis here into March, just to put this in perspective. So remember, when the asset falls, the asset's supposed to fall, gold in this case, when the dollar rises. They're supposed to be opposite, but there are some times when they can go up together, okay? So, there's times when that's the case, but most of the time, when you get a falling dollar, you get a rising gold, okay? And that's what we got here, this asset class here. So this is the Paris trade here. This is on April the 7th. It was long gold and it was short dollar. Okay. So in this is the Paris trade. So you would have been long gold, short dollar in this case. Now, what I'm trying to argue here is that in this case, the dollar went up, gold went up. So gold was actually very strong right here. But this rise in gold here is primarily a function of the dollar falling. Okay. So I just want to clarify that because, this is important because if you're looking at gold in other currencies, it's going to look different. Okay. Now that doesn't mean gold didn't want to go up on its own. It's just that the falling dollar helped it. The falling dollar helped gold go up. All right. Now next chart here is going to be an important one. This is the S&P. So let's talk about this. This is the S&P here. So S&P. So this is the crisis here. This is the COVID crisis, just to put this in perspective. And I'm going to label these charts. I have them labeled A, B, C, D, E. So what's happening here is that when you first started having this decline in COVID, you see that the dollar was going up and this was starting to fall. Okay, that's what you would expect. But they started falling here together, and this was the maximum decline here. Okay, so this was the strongest decline of the S&P. But then what you started to see here was you started to see that the S&P kept falling because the dollar was rising here. Okay, so in other words, that last part of the fall was just because the dollar was rising. All right, so this is, in other words, the market was getting relatively strong here because it should have been falling a lot more, but the dollar was really what was causing it. And then from this point forward, on the trade from point B, this is really what happened when the dollar started falling. So the weakening dollar here is going to correlate with this rising market again. So again, it doesn't matter which asset class you're looking at. If you have a weak dollar, it's going to put pressure on this market to go up. So it's going to put pressure on the market to go up. Now, like I said, there are times when the market can go with the dollar when the market's really, really strong. But for the most part, this is what's responsible for the rise of, one of the things that's responsible for the rise of the S&P and gold. So when I did that video last week when I was talking about inflation, this is because of the dollars falling across the board. Okay, so that's part of the issue. And it's related to what the Fed is doing with all the lending and the programs. So this is where the Paris trade would begin. You'd be long the S&P here, short the dollar here. And then it's obviously that's the trade right there. Now, this spread right here, it gets very wide at point. So at point D here, this was near that June top into here on the S&P. So the spread between the S&P and the dollar gets so wide that it can't stay that wide, and then it collapses. And that's what happened in June. So right now, we're actually at a place right now where that spread is very wide again. It matched what happened back here in June. So we're at the same exact spread on the U.S. dollar between the S&P and the U.S. dollar right now. So because that spread was so wide that now it's creating a similar situation to what we saw back into June. So the bottom line is that if the dollar has any type of a bottom here, okay, and then this starts to even climb just a little bit, even rally just a little bit, it's going to create a lot of downward pressure on equities. So it's going to be very hard for the equities to overcome that because so much of this rally was built into the fact that we've seen the dollar do what it's doing. And this is probably explains a lot of the reason why that we've seen this rally just look so ragged the whole way up, the way that it's looked, is because it's directly going opposite of the dollar. And so this is just one of the driving forces. The other driving force is the Fed, of course. But I just showed you that the Fed was weakening, and so if the dollar does turn up here, it could spell trouble for equity. So hopefully that makes that clear. I know that's a lot of information, but the idea is just this: that in general, there's a negative correlation. So if the dollar drops, these other asset classes rise. And of course, gold is in this very positive seasonal right now, and we put that out in the for the metals newsletter, that gold is in its most positive seasonal of the year right now. I will say one thing about gold too, for those of you. So Mars will go retrograde in September. Okay, so when Mars goes retrograde, it halts gold in its tracks. Like, it has a very high track record of stopping rallies in gold. So for those of you who are following gold, you need to watch that September. I'll put some more information out about it, but when Mars goes retrograde, there's a very, very strong correlation to gold ending its rallies. And you can go back in time, and it's very consistent on that. Like, it's bull markets end when Mars goes retrograde. I don't know why that is, but it tends to play out a lot. So we got to watch that, especially if the dollar turns up again, because all the gold rally could end too, or it could definitely slow down. So yeah, so just we got to watch that closely. Now let's talk about the dollar juice. So the dollar juice. So uh, those. Okay, I'm sorry. Read a question here. If the dollar reverses next week and stocks fall, will the Fed juice turn on? Um, it's hard to say exactly what the Fed will do, but I think so. I mean, from what I've seen, they're pretty quick to respond when the market falls, but they've been pulling back for quite a while now. So I just think that even if they do turn it up, if the dollar starts to rally, there could be a window here for about 2 to 3 weeks where the market could really have some issues going forward. So anyway, so that's just where I stand on that. So let's talk about the dollar juice. So the dollar juice is an indicator that looks at the S&P relative to the dollar. So since the S&P is priced in dollars, it is important to value the rise and fall of S&P relative to the dollar. The dollar juice tracks the S&P relative to the movements of the US dollar. Okay, so here's a big difference. I calculate this very similar to the Fed juice. So I spent all these years figuring out how to correlate and extract out the correlations between what the Fed is doing and what the markets are doing. I can now do the same exact thing with the dollar. But unlike the Fed juice, the dollar juice can be tracked on multiple time frames. So the Fed juice is once a day, right? So I get all this data, depending on it. I mean, sometimes I have to wait until 3 o'clock until they're completely done, but most of the time I have an idea around 2 o'clock, 2:30, something like that. This one, I can track it on a 1 day, a 4 hour, a 1 hour. So I think this is really critical because it's going to explain to us what's going on with the markets in terms of the dollar. So first of all, let's take a look at the 1 day time frame. This is the dollar juice here, and so this is when I optimize it on 722. Okay, so the minute that when you optimize a chart, it doesn't really matter what happened in the past because it's looking forward to the future. So when you do an optimization, this is the code in the past, whatever all of this code is. This combination tells you forward is good. And so this went on July 22nd, and this was one of the reasons why I was saying that, this little float up in the market, it actually hit a high, an intraday high overnight, which was very strange. But that was all because of the dollar. And I knew that when you saw this dollar juice falling like this, that we had a good chance for the market still to go down. And the dollar juice is still falling, by the way. So this is on the daily time frame, and the planetary speed index also went into a sell here. So yeah, so that was on the daily time frame. So I was looking at this, and I felt like, we had just everything still looked like it wanted to go down, even though we had that little jog up, and it was a pretty big jog up. It was like a 50-point jog up, but the volatility is so high right now that that's just what it was. So that's the 1 day chart. So now I have this to go with the Fed juice, so I can put this out every day, the 1 day dollar juice. And so the next chart here, this is a 4 hour chart. And I know there's a lot on this chart, but let me explain to you what this is. So this top chart here, this is the S&P. Okay, this is the dollar down here, in the middle. Okay, and I have a stochastic of the dollar, and this is the dollar juice down here. So before we get into all these letters here, I want you to go first over to the letter G over here. This is when the market started breaking lower. This is a 4-hour time frame. Now notice that sell signal came right around the 22nd into here. You see that? So the sell signal came and it still rose a little bit. You see that? So in other words, it did not get faked out by this rise in the market. You see that? And then it continued to fall like this. So, the market is now falling. It's falling. The dollar juice is falling on the 4-hour time frame. So it's telling us that the market is getting weak relative to the dollar on the 4-hour time frame. So I was able to look at this now intraday and see what's going on. And so that's really important, okay? Because we want to be like, let's say that the market starts falling and it goes into like a crash scenario, right? Now I can look at intraday and I can see what's happening with the dollar, and I can, start to say intraday, okay, the dollar is getting strong or the dollar is getting weak or whatever it is. And we can really start to gauge this with the dollar juice. So the dollar juice is a way to find the relative value of the S&P to this dollar index here. So just to go back at some of these letters here, let me just explain to you how powerful this is. And it almost doesn't look real, but this is what it is, okay? So this is the S&P here, and this is the dollar. So I want you to see that on a normal market movement here, that there's an inverse correlation. So when the dollar starts to drop here, down here, the market starts to rise. You see that? So when we're talking about a very small move in the market, this move at the letter A was driven by the dollar, right? And in the letter B here, okay, the dollar starts to go up and the market starts to fall. You see that? There's an inverse correlation or inverse pressure, let's just say. On letter C here, you can see that the dollar starts to fall, the market starts to rise. You see that? So there's a very, very distinct effect here. It's very pronounced. Okay, now there are some times when they can move together, like in letter D here. It moved with the dollar goes up, the market goes up, but then that was a signal of further strength. So when the dollar started to fall, the market went up even more. You see that right there? And this is the most recent advance here. The dollar has this big drop here. This was the day that everything spontaneously adjusted. When the dollar had that big collapse, all the asset classes across the board went up. Gold went up, oil went up, everything went up, okay, because the dollar dropped. And that's what we saw into here, okay? So you had that little bump up because the dollar had that big dislocation, okay? But now we see this sell pattern coming in on the S&P relative to the dollar. So, I mean, this indicator is gold, man. This is really good. And the thing about this indicator is that I can put this on other asset classes. I can put this on gold. I can put this on silver. I can put this on corn. Whatever it is, I can put this on those asset classes because we automatically know that everything is priced in terms of dollars already. So we're going to have a lot of fun with this. I mean, already on Friday, we were already starting to see all of these runs on this intraday, but it was really nice to see all of that. So anyway, so that's the 4-hour time frame, and there's also a 1-hour time frame, which I can look at too. But that's the idea there. So anyway, so that's essentially it in terms of my presentation here for the dollar juice. And I'm trying to keep these webinars relatively brief. So I'm Shane Smoleny. For those of you who don't know, if you like the video, please go ahead and give it a thumbs up, subscribe. And if you guys want to reach me, you can reach me at shane@wolftraderfutures.com, or you can go to www.wolftraderfutures.com. Does anybody have any questions? Any questions about the dollar or the dollar juice or the Fed juice? Any questions here? All right, so for those of you who want to go back and check out the website, I got 5 different newsletters here. Most popular newsletters are going to be the S&P, metals, energy. I also have currencies, and we have cryptocurrencies, and these newsletters are being updated all the time. I have Fed juice on all of these indicators. all of these newsletters. So, if you go to the website, you'll get daily updates on the Fed juice. And I'm going to be bringing in the dollar juice to these other markets too. So I'm going to read a comment here. So moving forward, the market is going to correct in August. There's a very good chance, in my opinion, that the market will correct in August. And I think we're starting to see the beginning of that. But again, I watch this on a day-to-day basis, so things can change, obviously. But I'm up to a daily update now. So when you guys just sign up for the newsletter, you guys will see these daily updates. So you'll get to see these daily. I'm just going to read some more questions here. May you explain again the dollar juice? Okay, sure, no problem. For those of you who want to go and check out the website, just one more time, this is what it looks like. So when you go there, it should say Wolftrader Futures, and you can go there and sign up for the free email list. There's a free member area where you can see the webinars, or you can sign up for one of the newsletters. Check it out there. There's a 7-day free trial. And so I think you're going to enjoy it. I think every day we're getting this newsletter better. So let's go back to the dollar juice again for Johan. He wants to talk about that. Okay, so here's what this is. All right, so let me explain this again. This is a relative comparison here between the price of the S&P. So this is the S&P here, priced in terms of regular dollars, okay? So for example, the S&P per dollar. So this is like 32.17 is the S&P here. This is just a regular print that you see in terms of dollars, okay? This does not account for the decline of the US dollar currency or the Fed juice. This is like the net effect of all of that, okay? So what I like to do is I like to take the Fed juice, whatever the Fed is doing, and I like to divide the price of the S&P by what the Fed is doing. So then that gives me the real price. So this is actually a very deflated market right into here because the Fed is pumping so much in. The real price of the S&P is much lower into here. Okay. Now, when the S&P starts to rise like this while the Fed is pulling back, what that means is that the S&P is kind of doing it on its own. Okay. It's kind of able to, it's kind of chugging along without the help of the Fed as much, right? And so when that happens, the true value of the S&P goes higher. It's like it's able to do it on its own without the Fed, right? And so I track this to see what is the true value of the S&P. Like when you take out the Fed, and so it's kind of up to a level here that's at an overbought level. Okay, and I look at that on the weekly level too. The weekly level is really low, right? And so I talked about that on a weekly level, there's still lots of room for us to go higher. But I mean, on the short terms here, I think that, because this is overpriced and because the dollar could turn up, that I think that we could really, we could start to see a pullback here on the S&P. And I will just say this too, for those of you who follow the S&P, this is one of the most difficult markets to short. So I think that, having that dollar perspective is going to help us out a lot because, the Fed juice is good too. Obviously, the Fed is excellent. But now I think we're going to be able to really understand a lot more what's going on because the S&P is just really, I mean, this, what you saw into here is, I mean, we had a relatively weak Fed into here. There wasn't big QE until the very end into here. This is very unusual for the S&P. Okay, so we got to really be careful when we short the S&P. I'm going to read some more questions here. Do we get daily updates if we subscribe to the monthly newsletter? Yeah, I have daily updates now on the website. So when you go to the website, you can see. Let me see if I can take you there. Just give me a second. I'm gonna go there to show you what it looks like. I'm gonna help you out here. Just give me 1 second. Okay, I'm gonna go to the website here. I'm going to show you what it looks like. Let's take a little tour. All right, so I'm going to take you down here. So this is the website here. All right, so let's just say that you're a newsletter member and you want to see what's going on with the S&P, okay? So and the metals and the energies and the currencies, these are building newsletters, and they're going to be, I'm adding more and more features to those too. But the S&P is really the main one I do. I have these slide presentations in here. So there's the newsletter here, and then you'll see like a presentation into here. So every day you'll see a presentation. If you have like a mobile version of it, you can click and download it too. Like if you have a phone, you can download a mobile version of it. And then you click on the presentation and it gives you different slides in terms of what's going on. And then on the last slide here, let me just go back here. Actually, I'll show you this. This is the dollar juice here. This is on a 4-hour time frame here. So this was the dollar juice falling. This is the hourly time frame of the dollar juice. I didn't get to show that in the presentation, but this is like on an even faster time frame. What's going on with the dollar juice? And so you can see here at the end of the day on Friday, the Fed came in with $8.8 billion purchase in the morning. And you can see that the market immediately shot up like this, and then it started to fall again. But the dollar juice really did a good job of capturing that on the 1-hour time frame. So like this is what I'm trying to say about the dollar juice is that I can actually look at this on intraday basis now. So I'm like sitting here tracking for the gold members, for those of you people who are on the gold service, I'm sending these screenshots shots out all day now. So we get this intraday analysis now of the S&P that we didn't have before, and it's really accurate because it's based on the dollar. So again, this is the dollar down here. This is the dollar here. This is the S&P, and then this is the dollar juice indicator down here. And again, I'm just showing you what would be on the member page. Like, so that's what you would see. And then, sometimes I'll put up like the last few advantages that we've had. So, the last few advantages, and again, I don't even call these trades just because when I track the Fed juice, the Fed juice is kind of all over the place. It has these big swings, and so it doesn't use stops or limits, okay? So, when I tell you the Fed juice is an upside advantage or downside advantage, those swings can be tremendous, right? And I can't. I've tried to do stops and limits on the Fed juice, but it doesn't want to work that way. It has to have its room to breathe. So I give what I call advantages. So these were the last 6. Okay, so so far it's pretty good on the last 6. I mean, this was a long trade here or an upside advantage here. This was an upside advantage here. This was a downside advantage which failed. This was on the first week of July. This was a downside advantage that made about 11 points. This was another upside that made about 40. And this is the one that we're in right now. This is the downside advantage. And again, look how much it jogged against us. You see that? And then eventually now it's starting to pull back. So, if you're dealing with like a mechanical trading system and you have fixed stops or whatever, it's very possible that this would have been stopped out. I'm just looking at the indicators. Like I said, like a pilot, I'm just looking on the board, all the indicators, and it was telling me this whole time, even when this was rallying up, it was telling me wants to go down. Okay, the only reason this is going up is because the dollar is so weak, right? And so when the dollar had even a little bit of flattening out, this thing immediately started dropping, right? So, I can't project out, and I wish I could tell you, like, hey, the next 3 weeks are going to be down, and the next 4 weeks are going to be up. And the problem is because you have such a complex system now with the Fed and the dollar and all of this stuff going on. When you have a complex system, it's really a day-to-day thing, and so that's why I'm really, I just go day to day. And we've been having some success here. I mean, definitely recently we've had success, and so hopefully we will continue that success. But like I said, this S&P can humble you very quickly, especially when you're trying to short it. It's difficult. It's a difficult animal to short. It's a stubborn bull. Um, is a month okay? Let's see. If we were, I'm going to read some more questions here. If we are not trading the intraday but looking to hold for a couple of weeks, is the monthly newsletter okay for the average guy? Well, I think it definitely gives you an advantage. It's going to tell you when is the wind at your back, when is the wind at your face, based upon what I'm looking at. And some of these trades can last for multiple days. Like this one here lasted for 20 to, this one lasted for 8 days, like into here. This one into here was 14, 18. This was about 4 days into here. This was just a fail. It was about 2 days. I was like, I don't want to deal with that. Sometimes I see a trade and I'm just like, no. I get this bad feeling in my stomach. I'm like, I don't want to deal with this nonsense. Uh, and some of it's gut. On that July short, like I knew it was wrong. Like the minute I got in the trade, it started moving against, and I was like, this is crazy. Like I don't want this. So I got out of that trade. Okay, so I called that trade early. So sometimes if I see something I don't like, and then this was a short into here. This lasted 2 days into here. This one was like 3 days, something like that. This one's been going on for a while. We've been dealing with this nonsense for a while. And I'd say nonsense because, again, that's a lot to deal with when you're short and that thing's running against you and it looks like it's about to break out, but I'm looking at my instruments and I'm saying it's saying down. So I'm just reporting what I'm seeing, right? So that's why I said you guys got to manage your own risk. I mean, if that's too much risk, I mean, and that's a lot of risk. I mean, you're talking about 60 points before it turns, but that's the problem is you have this volatility, and what are you going to do? I mean, if the volatility is that high, the volatility is that high. So I don't know what else to say. I mean, trade the micro contracts, maybe trade a very small position size. S&P is especially. I mean, we're in this COVID crazy time right now, so. I'm going to read some questions here. Okay, there are quite a few SPAC and high-flying semiconductors that seem to be overbought and not moving. What is your opinion for short-term or long-term? I haven't looked at those, but if you send me an email, I haven't looked at. I don't look at specific stocks as much. I look at relative strength of the S&P to like Google or Apple. But if you guys send me in a request, I will definitely look at it, and I could look at. The anything in terms of the dollar juice. I could run the dollar juice on anything. I could do intraday. So really, if you guys have a request, I'll be more than happy to look at it. That's not a problem. I just look at futures. That's just what I look at. I look at broad-based markets. Okay, there was a question. Where do you find the daily dollar juice? So the place you're going to start to find the daily dollar juice is here on the presentation. So the idea is that I'm going to be putting this on the, on the presentation so you guys can see this. So and then this is something too that I really think it makes a connection here with subscribers because um, this is the Remind app. So what this is this is an app that allows me to communicate with you guys on your phone. And so for the S&P, um, you know, the code on this one is WolfSP1. Of course, you have to be a subscriber for me to accept it. But the point is that in the day, you could get like a text message or, a couple text messages a day, saying, this the S&P is still on the downside. Check the website or whatever it is. And then that way, it's just another way to get communications, a text message on your phone. So, like I said, we're working on getting the communication better with you guys. So, and then again, I have getting some videos down here. So if you guys want to see these, this is actually in the free members area. So if you become a free member, you can see just how do you use the service, okay? Because I know it's a lot of information, and I'm trying to put this together for you guys. And then down here, I have the interim update. So I keep an archive down here. So if you want to look at like the closing bell from the 23rd, it's there. And you can see it there. And it's like a PDF. So it's just like an archive. You can see what's going on. So I'm going to read some more questions here. Okay, Ron says, okay, Johan, I got a huge weekly sell signal on Moderna. Also shows all the hype was fake. Okay, yeah, it's possible. Those biotechs are very volatile. Again, I can look into this stuff if you guys want me to. Okay, Ron wrote, Shane, confirming today's change in planetary speed index, the pressures in the S&P is downward direction. Absolutely. Planetary speed index is the most reliable astrological indicator. So that's what we have right here. So you guys see this right here. You can see this here, 724. It's actually today, okay? It's 725. But this is like the most important indicator. And for me to even go against it in short early was very difficult for me to do because I know how powerful this thing is. But yeah, this is down now for a couple weeks. So the pressure should be down on the S&P. Tom, never mind. It was painful, but working out so far. Yeah, I think Tom's talking about our short trade or downward position. If the U.S. next question, Atul, if we get the U.S. dollar index goes up next week, do you think gold will go down also? Okay, let's talk about that. Gold, just for those of you who are members on the gold service, the cat signal made a sell on gold on Friday. Okay, so what does that mean? And silver, they both made sell signals. So what that means, it's in a strong uptrend. Okay, so we got to understand that. But if the dollar turns up, absolutely it could fall because the cat is in a sell. I mean, the the cat signal that we look at actually traced out the gold and the silver rally like very well. I mean, it was incredible how well it did. Let me see if I can pull up one of those graphs for you guys to show you on the cat signal. We're at the end of the month here, so I can show you guys what these look like here, because I don't want to give too much away for our paying members here. But the idea was that the energy, the metals did rally according to that cat file very well. So let me see if I can pull this down here for you. So the cat file is a combination of multiple signals. So let me just show you here. What I'll do is I'm going to take a screenshot just to be fair to our subscribers. Yeah, I'm going to take a screenshot and show you just so I don't give away too much information here. But this is going to be gold here. So this is going to be the cat. Okay, so I'm going to pull this down so you guys can see it. I'm going to take a screenshot so you guys can see that. But this was the cat master signal on gold. And you can see that it caught it caught the bulk of that rally. So this was like given out at the beginning of the month before gold did its big rally this week. And the cat master definitely it caught that ahead of time. So this was given out at the beginning of the month, and that's in a sell now, and that's going to be pulling back for a while. So if the dollar turns up, it's possible that you could see a pause in the rally for sure. It's just that we do still have positive seasonals on gold right now. So just to give you, okay, so thanks for taking so much time. You're welcome, Atul. Okay, thanks. Okay, so what happens on August? Okay, all right. I'm not going to go too much into what's going to happen on August the 5th and August, but there's something major there in the charts, and I'm writing about it right now in the newsletter. It's the same transit that affected the markets in March, and yeah, there's a lot of heavy stuff coming up. If you guys want to, subscribe to the newsletter if you want to see more information on that, but definitely we are coming into a turbulent period here. Johan, but the Fed use overpowers the planetary speed index. Yes. Well, here's the answer to that question. Johan just asked, the Fed use overpowers the planetary speed index. It can. Okay, if I had to pick one, I'd pick the Fed use, but I'd really like to see both of them together. So, for example, if you had to pick one, I'd pick the Fed use, but I don't like to really go against it unless they're both moving together. So I hope that answers the question. Recently, we had this trade where we were short against the planetary speed index, and the Fed juice did win. You can see down here on the chart, the Fed juice did win eventually. Okay, but look, it drifted up against before it went down. So, that's not ideal. I mean, ideally, you want to see Fed juice down, planetary speed index down, and that's what we have now. We have dollar juice down, Fed juice down, planetary speed index down, cat signal down. I mean, you have like across the board down signals right now on this market. So that's very rare to get an agreement like that. So anyway, so I think that's it. Any more questions, guys? Any more questions? All right, so make sure that if you have not subscribed, if you're viewing this now for the first time, subscribe to the channel, give it a thumbs up if you like the video, and head on over to the website and sign up. You can become a free member or sign up for the newsletter. This is a 7-day free trial on the S&P. And I got another question here. Yes, in condition with Fed juice and planetary speed index. So yeah, yes, the Fed juice if I had to pick one, but really I like to see them both together on the Fed juice and the planetary speed index together. So hopefully that answers that question. All right, guys. Well, thanks everyone for watching. Any more last minute questions here? Any more last minute questions? Yeah. Well, guys, I really appreciate you watching, and I hope you and your family stay safe in this time of COVID. I'm definitely starting to know more and more people that are getting it. Younger people, but it's kind of crazy. I'm starting to to know. I mean, I'm hearing stories every day about people that I know that get COVID. So make sure that you stay healthy, wear a mask, follow that protocol, social distance, because all that stuff matters, guys. And we have to act together as a society. We have to be coordinated in our efforts to stay safe. So anyway, when is the next monthly update? Okay, next monthly update is going to be between August the 1st to August the 2nd. So let me explain to you real quick about that before we go. All right, Paul, here's the thing. Let me explain to you why next week is difficult. All right, so for me to get the data on the weekly statistics, okay, I have to wait until the last day of the month, the last Friday of the month. This month, the last Friday of the month is the 31st. So what that means is that on the 31st, I have to take all that data and collect it and put it into the newsletter. So essentially what I'm doing on that newsletter is I have about 70 to 80% of it built right now, but those weekly statistics, I can't get them until Friday. So I have like about a day turnaround time to get all that in the newsletter and get it out to you guys. So Saturday the 1st or Sunday morning, somewhere around there, I'll have it out. I have as much done as I can, but unfortunately, I have to wait until that last Friday of the month to get all that statistics because the weekly statistics are important. That's what allowed us to see what was going to happen in gold this week on the cat signal. Okay, so if I don't have those weekly statistics, I can't give the accurate cat. So the cat has to be built on that data and it goes to the very, very last day of the month. So August 1st or August 2nd, I'll have that out. So, all right, any more questions? All right, guys. Well, again, thank you so much. I really appreciate you guys dropping by. And, each week, hopefully, we'll have some more interesting topics to talk about. And again, I hope everyone out there stays safe, stay healthy, and I will talk to you soon. Peace out.